Hey, Mike here. I just bought a new stock in my portfolio. It's trading on the Toronto Stock Exchange. Sentiment, symbol CEE. It's actually a small cap gold producer with an incredibly cheap valuation. It's only trading at 77 cents, but the valuation for the stock is one of the cheapest I've ever seen. Now, I sold, it's nice to see the stock market up today, but I'm making a small alteration to what I'm doing, and this stock is part of that. As you may know, I sold a couple of my gold stocks yesterday, and these are big cap gold stocks that I had some losses on, and I've been holding them for a couple months. And what's been going on is that some of the stocks, or these stocks I've been buying lately, have been doing really well. And I'm seeing all kinds of stocks that look really interesting to me that I'm watching that, if they can pause a bit, I'll be looking to buy. So the bottom line is, stuff that I've been buying has been working really well. For example, even though I sold a couple stocks for losses yesterday, it was Barrick, IM Gold, and Nico Eagle. I bought two stocks and they're up. One of them's up 4% already in just today's action. The other one is up 1.35%. These are stocks I'm holding for the long term. And other stocks I've been buying lately are up. This bank, Spanish bank, I'm up 9% in. But even the mining stocks that are small that I bought, I've got gains on, even though gold stocks have all been weak lately. Imperial Metals, I'm up 15% in. Copper Mountain Mining, I'm up 9% in. Penn Growth, I'm up 9% in. Not a mining stock. Bank of Greece, I'm up 41%. Piraeus, I'm up 61%. So the bottom line is, most of the stocks that I've been buying, just because of their individual stories and their valuations, have done really well. When I bought stuff saying, hey, I'm going to buy a bunch of gold stocks just because they're gold stocks, didn't work out so well. So what I'm trying to tell you is I'm changing my focus a little bit, and I'm trying to focus, I'm still looking at the sectors, I'm looking at the individual markets these things are in, but I'm looking more and more at the individual situations and the individual valuations these stocks are at. So I wanted to shift some money out of stuff that wasn't doing good for me, and start focusing more on these individual situations. As a whole, my account's been doing fantastic, investing a lot in Europe and markets that have just been rip-roaring, but you got to periodically, every once in a while, take stock of all your positions and get rid of stuff that's not performing as well as stuff is as a whole. So that's what I did yesterday, and moved it into these two positions, and today just a little bit in this new mining stock. So a little bit of controversy if my mining sells yesterday, but that wasn't to say I don't believe in mining stocks or I don't think the sector as a whole is going to do great. I still do. It's just taking time for them to base out, and in the short run, the situations in Europe are definitely doing incredible, and that's where I've been making the bulk of my money now. But let's look at the stock I bought today, because you might be interested in it. And it's got an 848 million market cap, CEE, trading on the Toronto Stock Exchange. It's a mining producer, but here's the deal. Because mining stocks have crashed, this stock crashed too, and it has a P of 4, basically 3.78. If we look at its earnings, it's got a forward P of essentially 6, but a PEG ratio of 0.03, a book value of 0.71. It's one of the cheapest stocks I see right now when it comes to earnings. Look, a PEG ratio of 0.3 when 1 is fully valued. So it's like one of the cheapest stocks in the entire stock market right now. It's making 47 cents a share in revenue. It's got 10 cents and share of cash, a book value of $1.03, and it's trading at 77 cents. Well, it's got such a low peg value because this is a stock that's got mining operations where it's set to increase production and lower costs over the next couple years. If we look at the simple profile of the stock, it's got mining properties in Egypt, Ethiopia, the United Kingdom, and Australia. Its flagship property is located in Egypt, 160 square kilometers, located in the desert. And if we go and look at their presentation on their website, you can go to sentiment.com and go to their presentations, and this is one they did in May. Just going to look at it very quickly so you get the idea of what's going on and why the earnings are set to explode for this company. It's 2013, it's producing a little bit over 300,000 ounces of gold, but it's set to be producing about 500,000 ounces of gold in 2016, thanks to this project in Egypt, and it's also exploring throughout the world to find new properties to produce or partner up with people with. And it's got all the cash it needs to finance its activities, so we don't have the threat of a secondary offering hanging over our shoulders here. But I just want to show you something pretty amazing with this stock. This is the production, 500,000 ounces of gold by 2015, 2016. But this is what's neat. Its costs are falling because it's done pretty much financed its big operation in Egypt. It's spent all the money to get things going in 2012, and now it's hitting a sweet spot over the next couple of years where the amount it's producing is going to go up and its costs are going to decline. So that's why it's got such a low PE right now and why the PEG ratio is super low. So here's a sweet spot with the fundamentals for the company are, you're in a super low valuation and the earnings are going to explode and you're in at a low price on a fundamental basis. And here's something neat too. The chart of this stock is fascinating because, it got smashed down with gold stocks the past couple years, but since it bottomed in July, it's been outperforming all the other gold stocks. And while gold stocks have recently come down to the lows and they're bouncing today, this stock didn't pull back at all. So the stock is showing powerful relative strength in the sector, probably thanks to the fact that the valuations are super cheap. It's essentially a value play. So I decided to buy that. And that's what I'm looking for now going forward is I'm pretty well, 90% invested in the stock market essentially. So right now I'm not looking to just spend my rest of my money just to be spending it. I'm looking for super value plays that I think can go up 10 times where I'm getting in at. And that's what I'm going to keep looking for in the future for you too. And this stock I talked about already with the Wall Street Window Power Investors in a report I sent out on Sunday. I mentioned this stock amongst a couple others, amongst the ones I bought yesterday. So the power investors always get the ideas before I actually purchase them. Now here is what's going to happen too. After this trade today, which I just bought moments ago and sending this video out to you, I'm no longer going to be showing the trades in my portfolio for free to the whole world. I'm going to take that information down off my website this weekend and make it a part of the Wall Street Window Power Investor membership. So they're already getting these reports, they're getting the monthly webinars, but they're also going to have the only access going forward now to all my real trades and information like today, the exact shares I purchased and everything. I'm going to take that down for free from the website. And in the beginning of the first week of November, I think the 4th or the 5th, I'm going to open up the Power Investor membership for you to purchase and get in if you're a free member. I haven't opened it up since January. I've wanted to make some changes and think of ways to improve the service. And I don't look to sell people constantly all the time. I like to do things every once in a while and provide free information in between, so I can have a real relationship where I'm providing you with value, whether you're a paying customer, a free customer, or whatever the case. But the thing is, the time has come where I'm going to start, taking away. It's over. The free access to my portfolio is basically going to end after this weekend, and this will be the last free trade that's going out to the public. Still, we'll have general ideas and commentary, but as far as individual stocks go, this is basically the last one. And I think you can see part of the reason why is because, look, this is a stock doing an average volume of only 90,000 shares. It's got a nice market cap, but it's basically a small cap situation. And yeah, I do buy a lot of big cap stocks. I do also speculate in these low price stocks too, and these are stocks that, frankly, I don't want the whole world getting into. I don't want thousands of people buying these stocks, because the general public is very fickle and they panic, they sell out at the turn of a dime, they have no patience. I'm buying this stock thinking that I'm going to hold it for a couple years and have the potential to get a 10-bagger. Well, the general public can't do that. They want to buy something and try to make money in a day's time, and if it doesn't happen, they sell out. So they increase volatility to these type of stocks, and I don't like that, frankly. I want people that have the same kind of mentality I do, and I just want those people to be my paying customers, and I can deal with them and talk to them because we're on kind of like the same wavelength. So that's what's going on, and take this stock for what it's worth, and if you want to get in the service, I'll have more information about that. I think November the 4th or the 5th, basically the first full week of November, and I'll be talking to you then.